beginners would uh, email me, people, traders totally new or just new to the room. And I would just say, listen to Jay and don't divert. When you're consistent, 3 months, 6 months, 1 year, 2 years, 3 years, whatever your capability is, then you have your blueprint. Jay, he's the man. And then you can start experimenting a little so you can ask more questions of Jay and so on. But in the beginning, he said, do what I say. And I was like a little, like a military person reporting for, military. I was like, okay, yes, sir. And I just did what he said. Don't do this. Okay, don't do that. Do this. Okay, do that. That was it. That's my speech.
Yeah, that's the best way. When you kind of follow the system, you start to see why it is the way it is.
But you have to follow it first. Like there can be no, like I signed up for mentorship and I signed up to this room to do Jay's strategy, not to do my own. And that, if there's other traders who have more experience, much longer time, maybe they're in the market 10 years and they know much more. But me coming in, I was like, I had little experience and I was like, yeah, I'm here to learn what Jay has to teach, not do my own thing. And I'm so glad, because when I was doing my own thing, it wasn't working out. Sometimes it would, sometimes it wouldn't. But now with what I've learned here, I'm like, oh, okay, got it. Stick to this, stick to it. Do not divert, do not abort mission, period.
Yeah, the rules are there to help. And Janine, would you say that $1,000 day is that still exciting for you, or are you really after more than that now?
Yeah, I'm after much more than that now. And I've had some really, really good days that are like a high. And I would say after 6 months, $1,000 days were pretty much the minimum. That like I was for sure to do $1,000 day. That was just my jam, and that became very, very consistent. Um, and yeah, I feel really confident in the market. I feel confident even when I take a small loss. I do just jump right back in. And I think that maybe comes from, being a performer and understand being on stage and having a lot of adrenaline and having to keep cool. Um, and I'm just that kind of courageous type anyway. The losses doesn't matter to me. It took a few red days to put the daily max loss on, and then and thank God I did that early on.
Yeah, that's
Yeah, exactly. And I would never remove it unless I was like Jay's status, and that's a lot of years in the
he
market.
has a max loss. He said, I don't know
I
if it's actually
absolutely.
found on
Why?
the broker, but
Yeah, why do it? Because I moved to the East Coast recently and there was like a couple outages here, and I was like, "Oh wow, this is serious. It could really, really do something silly." And so yeah, I feel very protected in that way. I mean, of course, it's your due diligence. You need to stop. I need to stop out. I need to take care of my account. I can't just wait for a stop loss to set in. And who knows, it's so far they work. Believe me, they work. But you never know on a day that they don't. So I keep that in mind because you work too hard to sit at the trading station every day and work on your trades and discuss them with other traders. And this is like a lot of time, energy, even electricity and power. I mean, you pay the electric bill to keep your computers running. There's a lot of resources that go into trading. So to not be diligent and to have a mistake, or blow up your account or have a big loss, um, it's just not worth it. It's not worth it.
now, Janine, a question for you: are you sizing up bigger on the J-line curls or J-line rejections, or like kind of bread and butter setups, and then you do a different size on scalps, maybe a tighter stop on scalps, risking a few $100s with a really tight stop. How are you going through that process?
Well, that really depends on what what the market's doing. So, for instance, you know, in this downtrend that we've been having, where things have just been, like Apple and all the big caps have just been having terrible days. On those, I so it's really, there's like categories for me. On big days when the market's having big moves, I've decided for myself that I feel very comfortable going in with much bigger size. Um, and it will depend if there's a trend. I may take some off, add a little bit more, and then I start feeling comfortable, I'm in the money, then I'll start sizing a bit more. It's really kind of like something that I've been playing with recently, so I haven't really sorted it out completely. And then sometimes if I see like an A plus scalp, um, in the past I might have been like, oh, you know what, I only want to trade 1,000 shares or 5,000 shares or 2,500 shares, right? And then I would start to notice, as time has gone on, spending more time in the room, learning here in study group, learning from Jay, learning from the room, learning from screen share, is that some scalps are just, you have all the criteria aligns very quickly, and it's kind of like with your instinct, you just make your move. You're like, I'm going in with size on the scalp, because 5,000 shares or 4,000 shares on a 10-cent scalp can be really substantial than to wait all day for the stock to move on a smaller size. But this is again something that I play with and assess, either in the morning or the night before, or as the market is um, making making a definition on the day.
Yeah, that's good. I noticed that sometimes when you build the cushion, you can definitely have a lot more confidence. But sometimes if I size up as the day is progressing, I can easily get back, and then I get into this fighting mode, trying to make back a little bit.
Yeah, yeah, I've been there, and where I really size is at the open, on those stuffs, or when it's rejecting either like a golden zone, uh, open, or you know something like that, or J line rejection, where it's A plus. Um, that, and then I'll, at the open, I'll make like a chunk of dough, and then I'll be like, okay, now what do I want to do now that I've got some money for the day? And I don't really look at it as the week or something like that. I'm just like, right here, right now, what am I doing? What's my plan? What do I want to do next? And then I'll wait for the market to choose a direction. Um, and then, but I go through the same thing. If I end up taking, a little loss at the open at the beginning of the day, then I'll mind my manners throughout the day. But there's always a setup coming, so I just wait. I have a lot of patience to wait. But I won't. I've done that before, where I just fight, and it's so stressful. And I'm like, I like my life too much. I like trading too much, and I am so tired of that pattern. It's something that, like, I had to learn on my own. As I had to know it for myself. Like, okay, you know what? I've been fighting this pattern. It's exhausting, and I don't want to stay in that place anymore. And
Yeah.
so, what happens when I do something different? And it's just like that now. And of course, yes, I'll make some mistakes. I get upset. I'm not perfect. I'm human. I'm just a trader. And but yeah, I've been, through the journaling and through the support of having the room, I'm able to be like, you know what? I don't want to talk to another trader about that kind of behavior. So I'm just not going to do it. I want to talk to them about like, I want to talk to Eric about like Apple and the trades and where the 5 minute J lines was and where the volume came up. And I don't want to tell him like, oh man, I did this trade, blah, blah, blah. So I just try to like eliminate that baggage, that extra stuff. I'm like, I don't need that. I don't have time for that. That doesn't serve me. I don't like that anymore. It doesn't make me feel good. So
Yeah.
I'm just, yeah,
Eventually, after you fight a stock so long, or you've had so many losing days, you start to stop.
you wise up.
Yeah, you realize that. You know, like right here on Tesla, a lot of people will try to long into these breakouts, and then it just won't work, and then they'll try again, and then it won't work, and they'll try again. And eventually you start to realize that this is actually just going sideways here until it finally breaks in a direction. And instead of taking just the break, in this case it broke down here, and chasing into it, the smart thing to do is to let it break down and then take the pullback, and then you look for your short. And where does it go to? Right here, pre-market high. So this thing got above pre-market high, held it, consolidated, and then it got below pre-market high, which is a bad signal. So you let it pull back up and reject pre-market high. Maybe it would have only made it to the J lines and taking a rejection there, and then you also got the Camarilla pivot point R4 right here, which is an indication that if it gets above it, it can run strong, which it did here in the beginning of the day. But once it got below it, rejected it, and yeah, this was a great short right here, waiting for a trend line break. This is when the Fed was speaking. So I had a really good trade at the open. I thought it was funny because Jay was saying like, I'm such an idiot. I had an 810 average cost. He had an average cost down here, and then he was shorting the J line rejection right around here, and it didn't work. It just curled back up, and instead of over adding to the position, I slowly brought my average cost up and was able to make that work pretty well. Essentially buying at pre-market low, and then your target's pre-market high.
Very nice. It pays to have a strategy.
It does. Joel, I saw you have had a good trade in the trading room too.
Uh, yeah, I had a good day today. I
What
got
was
a
it?
crash
Really
map.
yesterday?
I've been moving between large caps and small caps. I just try to pick the best of what I see instead of trying to look for a setup. So I've been going back and forth between the two.
Yeah. So you took the what was the gap and extension?
Yeah, my entry was a little late
This
because
was
I was.
this is
uh,
really good entry. I mean, yeah, you could
well,
have got it a little closer, but
yeah, but I wasn't looking at it. I looked to the right, and when I looked back, it already stopped. So I just pressed the hotkey and got in there, and I got in a little low, but
and this is
it's still
pre-market
okay.
high, right?
Yeah, usually I try to get in closer to pre-market high.
Well, that was a perfect short, and then yeah, some partials probably at one
Yeah,
R or so.
10%, 10%, then
Oh,
half on
nice.
J9, then I added. No,
Recycled here.
yeah, yes, I've been using my long hotkeys to sell to add, so I don't have to do the math how many shares I need to add without messing up my average.
Yeah. Are,
So
are, are those helping?
yes, because I press, for example, I'm shorting here and there. I don't remember how many shares I had because I don't look at it anymore. I just press my sell 50% for my long hotkeys, and it will add 50% of my position. So my average will still be high.
Yeah.
If I want to add a little more, I press 100%, and it will be like in between the two. So it's kind of like easier for me
Yeah, that's
to.
a great way to do that. So what Joel is saying, you guys, is like here on Tesla, let's say you go long, you go long here, and then you're looking, you partial up here, and then when it gets down to here to the pullback, and you're looking to add in this area, instead of calculating how many shares, he just puts instead of, let's say, sell 50% of his position, he does, like if it was a short position, cover 50%, and that adds 50%. So if you had, let's say you had 100 shares and you press the cover 50%, it's going to add 50 shares
Yeah.
and brings your average cost halfway to the halfway point between.
That worked for DAS. I don't know if it worked for other platforms, but for DAS, that's
Yeah,
kind
but
of works.
for DAS, yeah, I'm sure it probably does. Another.
At least it doesn't work on Trade Zero, because on Trade Zero you've got separate for short. You've got separate key rather than sell. It's like separate short, so you can't like how to say, you can't accidentally buy while covering. Like you can't flip position.
Oh, it won't let you.
Yeah, yeah.
Okay. Well, it's worth trying on your guys' platforms. Sounds like Trade Zero doesn't do it. And then Joel, you also had some other really good trades. Where were they?
Well, the other one was Baba, but it was a J-line rejection, but I got out because it was holding the VWAP. I had the VWAP under, which I don't like when the VWAP is under
Oh
the
yeah, here
J-line.
we go. Yeah, this was perfect. So essentially, you shorted for the J line rejection up here, and it just curled back up. So and you
Yeah, I
got
was
right
looking at
back
it.
out.
It was like at the tape, even the 90, it was like the pivot point. It kept bouncing at the 90, keep bouncing at the 90, and then it went under the 90, and then I saw it was kind of reloading above the 90, so I decided to start cutting it.
Yeah.
Then
The
like,
only thing I'll say about this trade is, so you went short here on the breakdown, which can work if it's got increasing volume and it's starting to drop, but you could have put a starter or feeler size position right here at
yeah,
this 90.73, and you have like a wide stop maybe up to 91.50.
yeah. A lot of times I tried that, but for big caps, I don't know. Sometimes they just go, so I kind of wait a little more for big caps. And
So
I was looking at the 5 minute here, so I was waiting for the 5 minute candle to close to enter on the next one.
yeah, that works.
So
Yeah,
sometimes I try to get a filler on the top, and they just keep going up, and I go, oh, shit.
yeah, that is true. So I mean that does happen. That's why I think it's good also to get in with feelers with that wide stop. But if you would have had some book map liquidity showing up here, but as you can see, it just didn't work. It needed to curl up and go higher.
Yeah.
So,
And then I didn't do anything else today.
but taking those feeler size on the pops, and then once it pulls back down, you can sometimes get a partial. Or if it does actually break down and you didn't get a chance to add, you just wait till the kind of like how you did on Candy.
Yeah, no, I was hoping to go at least to the low of day, but that didn't happen. And I was content with my other trades. So I was like, I'm not gonna mess up my day.
Yeah.
Maybe the big cat.
Yeah, it
Think
gets
around.
the point of the day where you're like, should I keep going?
Yeah, that happens to me a lot. When I have a good trade in the morning and they open or something, I emotionally I'm debating: should I try again? Should I risk maybe 20% of the profit or something? But
Janine,
I'm afraid of you lose that 20% and then okay, one more time, and then that 20%. Next thing you know, you lost half of your profit, and that's when I start getting emotional. And that's
yeah,
when the battle starts for me. And then if I keep going, I may lose everything. And if I end up red, it will be a bad day. Sometimes I prefer just to walk away before that happens.
yeah, that's very good. Janine, if you're still with us, how do you kind of stop your days? Let's say you built up a profit cushion, and you're starting to take some scalps. When do you decide that it's time to stop?
It comes down to energy for me. I really have to check in with myself and just ask myself, um, how's my energy? What's going on? And sometimes even making some money can be just as much a charge in a different way as to losing money. It's euphoric and it's exciting, and so going in either direction, either getting too excited, too happy, It's not really in the middle. And being upset is also not in the middle. So what I've been doing lately, and again, my process is truly evolving still, is I make some money in the morning and I'm like, all right, yeah, I'm feeling really good. I want to continue. I want to jump around. I want to look at more stocks. I want to look at different ones. Oh, this is moving. Oh, I like this setup. Bam, 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 bam. Those are those are, I wouldn't say they're unusual days, but they're days where I know that feeling. And again, I think it goes back to being a performer. If anybody's an athlete in here or, had to perform in public before, but I'm like, I know that feeling when it's just, you just feel hot, you're just like, damn, this is good. And then there's other times where where I start to question, like, I don't know, should I go to another trade? Should I make him? I really like how much I made. Oh, I want. When I start doing that, I'm like, oh, okay, it's just time. It's just not time. I don't care what's setting up. Um, is I leave my desk and I actually go outside and I take a walk around the block for about 5 or 10 minutes, and I get outside in the fresh air, and then I come back and I feel like a new a new person at the desk. I think there's something that happens when you're just in front of the computer and I have to change the space. I have to make a change. It's like going through a portal. And I just have to make that big change. Wash my hands, have a glass of water, have a tea, read 2 pages of a book, or just something different. And then I come back and I reassess. And sometimes it's just about, browsing through the boiler room and seeing what people are doing, looking at the charts. Oh, that looks really good. Oh, I missed that trade. That's a really good right there. Wow, I really like that. So just kind of assess. And then by going through the boiler room, by checking in what people are doing, it brings me back into the trading and, looking at some charts, making some lines. I kind of try to let it come a little naturally as opposed to force. I've done that. I know what that's like. I do not like muscling through trades anymore. And I'm just really over that. So that's how I kind of assess it. I really take it, it's moment by moment, day by day. How am I feeling?
Yeah, that's great. Anyone else want to comment on that? Mac, I know that you go walk the dog, take care of a few things.
Yeah, that's when I'm not too stubborn. But yeah, it does help. I mean, sometimes it helps. It helps me probably if I'm in a good position, already in a position, and helps not to take too many covers. That's when I sort of just leave a little bit wider stop already, take some partials, and then just like, yeah, go walk a dog, sort of come back and see what it does. So so you don't cover on every tick down, so you don't end up like taking covers every 3 cents or something, and then the stocks moves further down, and you like, oh, I've got nothing left to cover basically.
Yeah.
So if I see if by stats it's like there's no high IO, no, it's not a micro cap or whatever, and it's got dilution on it, and I'm got a good entry, I'm more inclined like, yeah, I'll just leave it work, don't look at the screen.
So Mac, also tell us, you're coming near the end of the mentoring after a year, and I saw your post that you've been growing your account quite a bit lately. So, what kind of has changed recently? Would you say
No,
less fighting, or
I wouldn't say I'm like growing my account or whatnot. I'm definitely not at that stage. I'm just, I would say, for me it was like the whole year because I've started basically from nothing. Like literally, I didn't know that that Trade Zero exists, or that I have to pay for market data to get like live data without delay and whatnot. I had no idea about those things. It was all like new to me a year ago. So for me, I think this year was more to do with like risk management. So as Janine as well said, it's like the max day loss. I'm probably been with a max day loss since day one. I had it set, and I always try to cut my losses quick. I don't allow for it to go against me you know, 2 points or whatever, or even 50 cents. Like, I think, I don't know, my biggest, probably widest stop is like I've got 15 cents or something like this. So, and then I try to, you know, use it as well. I don't use it very often. I try to get my entries really tight. Sometimes it works against me. Sometimes I need to let it, you know, work. But that's just the thing that I need to adjust with time. You know, once I get more confidence or those sort of things.
Yeah, that's good. Okay, so does anyone want to send a chart over? What would you guys like to go over? Anything in particular? Any more comments on that? Saw Toptic had a. I'm not sure Toptic might be working, but he had some great trades too. Franco, let's see, what did you trade? Short Nvidia. This is for the afternoon. Yeah, that was a good one. This was today, right? Yeah. Yeah, I think that some of these trades have really been clear lately on the big caps. A lot of, you know, with yesterday being a strong day and today getting some good movement. That's why today I was looking to take the longs off of pre-market low. Here on AMD, kind of consolidated in this pre-market range like this, and chopped here at pre-market high. But then what I noticed on it is that it wasn't breaking down, so the J lines were kind of wedging into it, and it went lower here. It made a lower low here, and then so on this lower low here, I waited for it. I bought with like a, you know, 20-cent stop, and then if you guys look at Bookmap right here, you'll see what I saw. Right here. So this was this consolidation kind of from here to here. And when it got down to 112, just some big orders showed up right there, and it wouldn't budge through it. So I took it long right here, kind of buying the dip, seeing that it was strong. Because we had a strong day yesterday on AMD, and then today I was thinking, okay, well, we could sell down, but if we do have some good selling pressure, it's going to at least make it to pre-market low, and then test around there. Maybe the buyers will try to bounce it at pre-market low. But we didn't have that. It just chopped for the open, and then it went straight up to pre-market high, chopped there. It was making lower lows, and that's where I decided to buy the dip. If it would have broke through 112, I would have just cut it, maybe gave it an extra 10 cents. So just so it has a little cushion. But yeah, I mean, this was just a one-shot opportunity, and then it didn't pull back.
Hey, hi. I have a question.
Yeah.
On the book map, that heat map you said you enter. Why was you decided to enter? Could be sellers or not. How you decided? That thing is confusing me.
Yeah, so like on a normal day, if it was selling off hard, maybe, using such small liquidity pool, heat map wouldn't have been a good idea. But today, knowing that the market was strong yesterday, and let's see, we move around here, we can see here at the open as well. Look at, so it pops up, goes down, someone holds it up right here. They have this, they put enough strength on the bid that they're able to hold the price up at 111. It goes up, it comes back down, and then again and again. And as you guys know, Jay has said many times, if you see a pattern or some sort of clue, signal, something that happens that day in the market, they'll do it again. So if you see a fake breakout, there's a very good chance it's going to happen again. If you see the liquidity getting held up, propped up down to the penny, you can see it happen again. And on this day, it was holding it up. It wasn't taking out any major liquidity zones to the top side. It was kind of going for this 113. They placed it here. It took it out. It faded back down, but then sure enough, they were dropping liquidity here at 112. They propped it up, and then right here is where I decided to take it. And this is kind of a risky trade because you're not taking the breakout where it's going in your direction. You're buying the dip, but that way you have just a tighter average cost. And then just looking at the 1 minute here, you can see that it was consolidating kind of sideways here for a long time, from 9:45 to essentially 10:10, so 30 minutes. And on a normal day that we've been seeing over the past month or so, it's not doing this. It's fading hard, you know. So so yesterday was strong. I saw it got held up. I saw that we were kind of holding up here of this area. So I said, okay, let's give it a go. And if it drops down here, then it will maybe chop in this range. But if I give it a little bit of a cushion and it reverses back to at least the top of the range, then that'll be good. And that's what I did. I bought it at the bottom of the range, buy low, took a partial, moved to break even right away. If it would have rolled back over, I would have just got out. But it ended up working, sold at the top of the range, and then it finally breaks out. We get increasing volume here, breaking out on the 5 minute. This was the first 5 minute candle that it closed above pre-market high. On all these 5 minute candles, it pops above it, it doesn't close. It pops above it, it doesn't close. And this is the first 5 minute candle that closed above pre-market high. So I knew that the next candle would either pull back and test pre-market high and go, or in this case, it just went. And I could have held my partials a little bit better because knowing that it closed above pre-market high, that was a signal that it's going to go up towards R4. We're above resistance 3. We're in between resistance 3, resistance 4. So, you know, you're going to R4. So I could have held some of these partials right here a little bit better. But yeah, besides that, you're just kind of playing off of the 9. And I wanted to see it get going strong again up towards 115, but it kind of chopped for 15 minutes or so. And that's where I said, okay, I'm not going to add to this. I'm just going to wait. And I was hoping that I was entering at a good position for a swing trade, but with the Fed speaking, they just dropped it down, got me out at break even, and then sure enough, it goes 50 cents to $1 lower, and then it curls back up, and it's actually oh, there we go, yeah. So it did end up going lower towards low a day, and then now it's back up above high a day. So a lot of volatility, not much you can do about it. This would have been a good trend break right here, but yeah, that was buying the dip instead of buying those at the breakout where there's a good chance it's going to fail.
Yeah, and I like how you waited for that consolidation prior to that dip.
Yeah, this was pretty good patience for me.
Yeah.
Usually I'll test something, you know, being impatient, kind of just an engagement order. But in this case, I saw it dip down. It tested kind of right here, this previous pivot, tested it here, bought back up. Then it came back down, tested the J lines, kind of tested this high, this low, and then it bought back up. So then when it came back down here again, and I saw it testing also this red line kind of here, that's my 200 on the 1. So I was like, okay, this thing's strong. So
Still looking at the 10-second candles for that entry? Or no?
for this one, no, I didn't. I was just late in the day. I'm not using the 10-second candles as much. Really, I'm reading the order flow and just paying attention to the tape. See here, if we look at the tape here, you see all these red bubbles, right? Okay, it's red bubbles and it's going up. You know, as you guys know, that's the red on the time of sales is transactions happening on the bid. So it's kind of like they would be hitting the bid, but it's actually going up with red prints, which is really interesting. And then it pulls back down, red prints, but it still holds up the same area. And then same thing again here. A lot of red bubbles, red prints happening on time and sales, but as you know, it's the relationship to what's printing and what the candle's doing. So it didn't really pull back. It would be creating red prints, orders happening on the bid, but it wasn't actually selling down. So that's where I said, okay, this is pretty strong. So, you know, you guys make sure when you're using Bookmap, you look at these circles, and then you look at it into relation of what the chart pattern is. Because some days you'll have all green, and it'll be like selling down, but it's all green, and then maybe you'll get a very strong move up because they were accumulating a position. So, yeah.
Eric, regarding this, Mugen was talking about there's an indicator. I think if you got like, I think it's a Bookmap Global Plus, I think, and you can add it like for free. It shows so you're gonna have like, let's say, this red bubble, you know, where it was going up. So it's like red bubbles where it's going up, but the indicator adds like a little square inside the bubble, and if it's green, that means it's been absorbed by buyers. So I'm suspecting that's what's happening here. Like, you know, they're soaking or absorbing, you know, whichever way you look at it. So someone is
Yeah.
selling, but it's being absorbed, you know, by basically by buyers, and that's probably why it's going up. So they keep propping the bid higher and keep like buying everything up, all the selling. So I think that indicator would be interesting to see in situations like this, to see if it's actually lights up, you
You
know,
know,
green
we
green square.
we've talked about this before, me and you, Mac,
Yeah, yeah,
remember?
yeah,
And
yeah.
so I kind of have researched that, and the absorption indicator. I mean, that could be one way to do it, but I've talked to people, and kind of the theory is that if I know the stock is going to go up today, let's say I'm a market maker, or let's say I'm a hedge fund guy, whatever, and I'm really comfortable that the market is going to go up today, right? I just kind of have that feeling, or I have some inside information, which they're not supposed to trade off of that, but who knows what those guys do, right? If I knew it was going up today, would I be buying with market orders and transacting on the ask, or would I just place limit orders and transact on the bid?
Yeah, that's
And the answer,
easy answer.
you know what I mean? So if I knew the market was going to go up, I'm not going to enter with market orders. I'm going to use limit orders on the bid. So if it's transacting and happening on the bid, and I'm buying on the bid, then it's going to print red. It's going to print red. So in a case like this, where we're seeing red prints while it goes up, that's where it's important, because a lot of people see red prints and they think, oh, people are selling. But if it's a strong day and everyone knows it's going up, all the algos and computers know it's going up today, they're going to transact with limit orders on the bid. So the prints will be red, but it'll actually be going up.
Have you tried playing with that absorption indicator to see what it shows in those cases?
I haven't tested that, no.
It would be interesting to see. I mean, if it
Is it
gives,
free, or?
yeah, if you got Global Plus, I think it's free. Yeah.
I don't have Global Plus, which I think Global Plus gives you the iceberg indicator and a few others, right?
Yeah, I believe so.
Yeah, I don't. It's like, I think it's an extra $50 a month, but the reality is, I've just realized I don't really need that. It's not helping me so much.
And
And I never hear Jay using it either, you know?
yeah, that's true. I may actually switch to just Global or whatever without the plus if it's much cheaper, because I don't think
it's worth having
I'm
the
using
plus.
it as well. Yeah.
I think with the Global Plus, you get the meetings on Wednesday with Jay, which is nice, right? But
Oh yeah, that's true.
but yeah, for me personally, it's got the iceberg indicator. It's got, I think, the cumulative delta, and then it's got like the absorption and a couple of others. But I've researched and read about them, and we're trading patterns, we're using volume, we're using liquidity zones on the level two. We don't, something like that would just be adding to the equation and probably making it more complicated to make a decision.
And the other thing, I've noticed that all this happening like at the open, because a few times that we discussed this thing, I noticed that it was always at the open that it does that. This like counts as sort of red but going up or green but going down. Did you try to track it, like whether it gives you the indication whether it's gonna go up or gonna go down like further in the day?
I wouldn't say track it. I mean, definitely at the open, reading the tape is confusing as it's just going, every direction. You don't really know. That's where using the levels, I think, is more important. Pre-market high, pre-market low, J lines, and any daily levels. But as the market starts to put in some time, 10 minutes into the day, what I do is I glance at all these, bubbles, which are showing if the majority of the transactions were happening on either the bid or the ask. And it's like looking at the tape, but a histogram of it, so you can kind of see further back. So when I look at AMD here and I see it from 9:30 to 9:40, I see a lot of red transactions. So you got to be cautious with that, and because it could have been short sellers accumulating into a position, which very well could have happened today with how high they ran it up, and then they had that huge stuff down later today with the Fed speaking. They were accumulating into a short position, building a really big position, and then once the Fed spoke, they were able to drop it down. So, which you would want to have as big of a position as possible at that point in time, right? And you're just adding on the way up. So, I always am looking at this to see what was happening on the tape, and then that can kind of give me a clue. Because if it's like all green on the tape and we're moving up and you just know it's a strong day, you know that your scalps off the 9MA above pre-market high are going to work better. What else, guys?
Great example, Eric. Thanks for that book map. Going into detail on that. That
Yeah,
helps a lot.
Janine, if you're not looking at the bubbles like this and it's telling you what's happening here on time and sales, this is a good clue for scalping and having more conviction in the setup. Because let's say you flip to a stock, you're not going to see what was happening on time and sales getting printed, right? Because you just flipped to it and you just missed everything that it just did. But if you pull up the book map, you can actually see the history of essentially the time and sales.
Neat.
And this like opening bubble always messes up all these ones. So if you just like scroll past it, it reformats the size, and then you can kind of see it a little bit better.
Okay, so that first bubble, that's like on the first candle or right before the open?
Yeah, no, that's right there at 9:30 at the open. When you get this huge volume spike,
Okay.
right at the open in the first minute, 1.4 million shares transacted.
Wow.
It always like messes up. So if we look at this candle here, it actually ended as a green candle on the 1 minute, but this bubble here was red. So there was just a ton of transactions happening on the bid, and maybe they were selling it down, and then they couldn't. And it was getting held up.
Yeah, and I was gonna say too, like on, like where you bought the dip there, that's what you were asking me earlier is that's the kind of trade that I may put in a feeler on something like that, and as soon as it starts to go up, I just start slamming buy, and then I'll take a bunch off, and then I'll let it ride. So it's really,
That's cool, yeah.
yeah, I'd like to say that I have a strict system that I use every day. And again, it's just like it's a parameter that I play with, because I just learned in, that like anything could happen. And I'll talk to myself. I'm like, yeah, I've bought into that, you know, I've done that where you like you waited for that consolidation there before you bought the dip. I've
Yeah.
been in that mess where it's gone above the 9 and below the 9 and above the 9 and above, you know, or above and below the J lines, like, you know, just a little squiggly there. I've gotten burned in that area before. So like that's where someone else, maybe that's their strong point where they're like, oh, I know how to scalp in there. And I'm like, oh, you know what? That's not my area. I'm going to wait. I'm going to wait for my trade.
Yeah, Jay would actually tell you, tell me not to take the trade here, because why? We're inside the pre-market range.
Mm,
So, the probability of the setup working is reduced.
I
He
see.
likes to see it break pre-market high, get into a new territory, give some signals, and then he looks to buy some dips. In this case, you see how the J lines start to creep above pre-market high?
Yep. Yep.
He would like to see it pull back and then take a J line curl above pre-market high.
Uh-huh. Yes. And with the
then you
9
have that.
supporting the J lines, right?
Yeah, see here, it got really close, but it was actually so strong that it didn't do it.
Mm-hmm. And that's the thing, you have to notice, you know, that that's your trade right there, that you have done your due diligence, you saw the signs that said, you know what, I'm longing right here.
Exactly.
You just get a feel for your, just get a feel for you in the market, you know, it's like, this is what I do.
So yeah, pretty simple trades today. We've been having a lot of these every day, either a rejection of pre-market high. This past week we had a rejection of pre-market high almost like every day. And then the week before that, it was so weak in the market that it couldn't get up to pre-market high. So it kept doing just J-line rejections. And then, so 2 weeks ago, it was like a J-line rejection, very clear every day. Then the week prior to that, so 3 weeks ago, it was back to rejections of pre-market high. And this week, we had a pretty good rejection of pre-market high on a few stocks, but then yesterday it held pre-market low, and today it held pre-market low. So that to me is starting to signal we're seeing change. We're seeing strong moves up higher. So you got to be cautious because you want to see the market pick a direction. That's what Jay was saying today. Fed speaking, everything's gapped up. Today is not the day to just be scalping right at the open. Wait for a direction, and once we have the direction, then go with the trend.
Yeah, and these days, I mean, anybody could speak, any kind of news could come out at any moment. I think you just have to be really cautious. Go with your, trade your setup, trade the chart, and then you listen to the news on the side. I don't listen to the news, but like if the Fed is speaking something like that, because all of a sudden you can be in a position, which I didn't know that long time ago before. I'd be in something and be like, what's happening? Why is this dumping? Why is this going up? Why is this moving against me?
Yeah, plenty of times. That has happened to me plenty. So now I just like to check that the economic calendar, and then you can see here today on Wednesday at 2 o'clock FOMC announcement, and then they had the press conference after. They had a petroleum report today at 10:30 a.m. So what did they say today at the Fed meeting? Did anyone listen to it? Because
Didn't they raise the interest rates or something?
but what did they?
Oh, I don't know. I didn't listen to it.
Was it a quarter or was it a 0.5%?
I thought it was in a quarter, right?
Yeah,
I think it was a
today
quarter,
was
yeah.
a quarter, and then another quarter at the end of the year, then next year, like another half throughout the year, something like that.
Well, and that changes probably housing. Like, before, like you saw a lot of people, buying, cash buyers, or interest rates are so low, people are, buying, and now that maybe they can't qualify or the interest rates are,
Yeah.
So they start going back in the market. I mean, who knows?
Yeah, no, that's going to definitely slow down the real estate a little bit because, we've been having this buying frenzy that's happening. People like battling over houses and paying way extra for them. But now with the raising the interest rates, there's going to be a bigger spread between the banks. You know, one bank, you go to Bank of America, they might be charging 4.5%, and then you go to some other bank and they might be at 5.5%. So there's going to be a big difference amongst the banks, and that will slow down, I think, some of this crazy buying that's happening. I don't know if it will here in Florida, but we'll see. So what do you guys think about? They raised the interest rates. Everyone was like all worried about that originally. Every time they talked about it, and the stock market would go down. Now that it's so low, it went up today when they decided to raise the rates.
Well, I think about the stock market, and especially after, living through some, big moves in the market, is that it just kind of always returns, right? You don't know how long it's going to stay low. But I think America is really defined by the stock market and other things too. But it's almost like if we let this fail, and if we let it fail for too long, what does that do for our economy and the world's economy? So I don't really freak out anymore when I hear the news. I just go, oh, there's a little adjustment, and I go, and thank God I'm in the right room where I know how to short and I know how to long, and I can whatever's happening, I'm in the mood for it. Let's do it.
Yeah, exactly. Leafs, are you with us? I know that you always have a pretty good outlook on this stuff. Let's see if Leafs is here. I see him, but guess not. But yeah, I think it's going to be pretty interesting, needless to say.
But do you stay away from it? Do you watch it? Do you ignore it? How do you handle, like, if Fed speaking or something like that?
You can decide to trade during those times. You got to have a wider stop because the VIX and the overall volatility will increase. But you just got to follow what's going on. If we start to just draw some trend lines and follow it, here's the low, and then I'm going to connect it to here, and it really didn't do a great trend line break here. This was not a good move. So then you can say, all right, we've held up here. Then we let it roll over. It was running into R4. It couldn't get above R4, resistance 4, so it rolls over, and now we start drawing trend lines again. And here we go, is the first trend line break. It pulls back to the J lines. And then what we want to see is, this is a good setup right here, J line rejection. So we see that the market sold off after being pretty strong. It gave back almost all of its gains on the day, which that's not a good sign, right? Now we're trading below 5-minute J lines, and we've got pre-market high, so we're trading back into the pre-market range. It goes back up towards pre-market high and the J lines, runs into it, and then we just wait for the trend line break. And then there it is, right when the Fed's speaking, right at 2 o'clock. 2 million shares go through right there. So that was a good short right there.
Yeah, really good short.
And then it comes back and shakes you out.
And what I'm seeing in the last, 4 to 6 weeks, let's say for, Apple, for example, things that are, like, I noticed that there'll be, big buyers at a certain time. And I'm wondering if, I think every day for a week or something, at around noon, I would see big volume, at the bottom. I don't know what level it was.
Yeah, like at the end of the move?
Yeah, there would be huge downtrend, and then it would just,
Real big volume and then reverse.
Yeah, and then just totally reverse. And so I'm wondering, someone could be, there's so much a hypothetical, like someone could be buying right now in big volume, for 6 months down the road or a year later, or, something like that.
Yeah.
People, buying the dip, or institutions or something getting ready for another time in another place. So,
You should check and look into volume price analysis, and look up a term called just ending volume. So, you know how we get this really strong volume at the open, and maybe it'll push up. Sometimes if we get these really long trending days, where it's kind of trending up all day, right at the peak, you'll see this huge amount of volume come in, and then it will start to roll over, and that's what they call ending volume, where the guy who was accumulating a position for 30 minutes to an hour, it reaches his target, he sells it all, and then he's essentially, if it's a market maker, he's flipping short there. So he bought it at the bottom, he's accumulating all the way up, the algos are just buying, 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 and then it gets to, a higher point after running for an hour or two, and it will give you a volume signal, which they call ending volume, and you'll start to see the reverse there. And it'll be a volume anomaly where, just like this is almost, this was actually like off of the meeting, but sometimes you'll see like this really low volume, and then right at the ending volume, it'll shoot up like this, you'll get a couple million shares through, and then it goes right back to this low 500K volume.
ah,
And let's see if we can find one.
that's interesting.
So like even kind of right here, this is not the best example, but if we look at the volume here, this is not the best example because you want it closer to here, but you have this opening volume, it goes here, and then you see how this volume candle was actually higher than the rest of the entire day. Like here's in the second and third minute, which is like very high volume still. This at 10:30 was the highest volume so far, besides the opening candle. So that's kind of like what they call an anomaly, or it could have been ending volume. If it was a little bit higher, it would have been a much clearer signal for ending volume. But meaning, this was the last push that these buyers were going to do, and it throws huge volume. And then what does it do? Right here, where it threw the big volume, it starts to just roll over, and they let it roll over because they're done.
Yeah.
They did their job.
And that's true too about, just being on a trade, day trading is that all I'm wanting to do is just get on the coattails, attach my star to their wagon,
Yeah, definitely.
and then I check in and I go, oh, and that's what it's interesting because you talk about, the information in my mind that I'm looking for, but I don't know that it exists. I
Yeah.
just sort of like, again, as a performer, I kind of feel the room and I go, oh, the temperature changed by a degree in here. I don't know why, but it has. And I think we're done with this section of the performance. And so it's got to move into another area. And so I think it's the same thing as stocks, where I just go, something's changed and I feel different. And so I'm out of the trade, and I'm going to wait, and then I'm going to reassess, because I don't have the name for it that you've just displayed. I just go, there's a change. I don't know why, I don't know how, but I'm out. I'm done.
Yeah, and that's where it's important to just do little bits of research over time, because trading, we're not doing anything new here. This is all stuff that has been around, and there's someone that's talked about it before, and you slowly learn these kind of things. Here's like another example. This isn't the best example. They're not very clear examples always, because if it was so clear, everyone would be trading off of it. They give you these kind of half-ass examples. But here's you got this strong opening volume, as you guys can see. It chops down, curls back up, and then right here, this wouldn't be ending volume, but this kind of stuff down here in this 1 minute, this was like a volume anomaly, where there was 800,000 shares traded in 1 minute. It was higher than the whole day. And
So
then
what
what
do you mean by
happens?
end trading though? End trading now?
Yeah, ending
How do you,
volume.
an ending volume? How do you,
Like you
how
have
do
the beginning volume where they're buying it, let's say, and then it's going up, 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 and then the end is where they sell everything, and then
Oh.
they're either out of it or they're changing the direction.
Okay, so on this one, you say that's not really an end volume there?
Yeah, because this is not a clear trend. But
Yeah.
this was just, what you look for is these large volume spikes, and then you try to get answers from it. Okay, it popped up here. They threw huge volume trying to stuff it down. It went back to the J lines. Then when it made it back to high of the day or pre-market high, they couldn't get it any further.
Mm-hmm.
So, if you were playing off of this level here and said, okay, and this volume anomaly, this volume candle, it potentially has some signal or some meaning, and you just kind of draw trend lines with it, you could have had another short opportunity here, off of pre-market high, because someone was saying, hey guys, we made it to pre-market high, but I'm dumping
Can't
my
push it
shares here.
any further, yeah.
Yeah, we're not going any higher here. I'm not going to let it go any higher, or I'm going to be dumping all my shares here. Maybe they wanted the stocks to go up, but then someone goes and holds it, or whatever was happening in the market. So you can kind of play off of these anomalies that are happening, and then use it as a clue to either take a trade off of it, or give yourself a signal of direction. This one's not a great example. We can keep looking, but
When I've
yep.
seen that too, where you see a big, volume, a red volume candle like that, and there's some sell-off maybe from the day before or the morning that's reached a certain point, and I've seen a big sell-off and then a big push again, and then they'll sell it off and then another big push. So I never just jump in when I see big, sell-off candles like that, because I'm like, I don't know exactly. The move has been done. It happened so quick. I'm like, there's my short. It just went. There's no more. They're done with it. Now they're pushing it back up. I missed it,
Yeah, that's what happens. Let's see if we find another one.
How are you doing that with your, I'm not able to do that on my DOS.
Where I hold shift like
Yeah,
that,
yeah.
and then I can just look at whatever window of time you want. You gotta hold shift. Let's see, can you right click? No, you
And it's
can't
such a
right-
cool move, and I googled it this week because I had absolutely no idea how it works, right? And then it's one of the things like that's super simple once you know it.
Yeah. You just the people don't like the charting as much on DAS as like Thinkorswim, but you just scroll back and forth like this, and then if I want to go, I see this high volume and I want to go look right here, I can zoom in like that.
Okay.
But how do you
Scroll.
center it? Like I always have it just like the chart is then just at the top of the, the candles are all at the top. Like I
All
only
the way
see,
up here.
yeah, all the way
Oh.
up here, and like
There's a
How can you
setting
pull it
where
down?
you can change like the Y and X axes of where the candles go to, so that way your candles aren't going off your chart. Let's see.
Sorry, Eric. I also want to hear where you were going with the candles too. I didn't mean to interrupt.
It's all good. It's all good.
yeah, I'm sorry, I'm the same here.
No worries. Let's see.
And my chart area configure, that doesn't even look like that on my DOS, like how yours is.
Yeah, this is the updated style. You gotta go again. Let's see. Okay, this number right here. So when you right click on the chart, yours
Right.
might look a little different. So you press configure, and then it'll still have all these things in it. It's just gonna look a little different than mine. Scroll down to Y-axis margin, and I think the top bottom percent margin. Play with these numbers, and you'll start adjusting the margins of the chart. So that way, the candles aren't going all the way. It's always like kind of centered in the chart.
Okay, thanks, appreciate it. And
Yeah.
sorry for the interruption.
And then Janine, for you,
And also the study configuration, Eric.
the which one?
Study configuration. If you right click on the study configuration a little bit,
Study config?
yeah, and go to pivot, for example, or whatever.
Yeah.
Okay, go to config X at the bottom right. That one. Okay, if the first one is on, it's gonna force all the studies on the chart. So it's gonna, it's gonna be totally different.
Yeah. Well, this one makes the name show up. This
The other
one,
one, that one.
yeah, this one, you guys make sure you turn this off,
Yeah,
because then it's always like forcing your 1000 MA into the chart.
yeah, it's
So you
horrible.
always see the 1000 where you don't want to include it into the scale of the chart. You want to, so that way when you just see it, it's there. You don't want it forced in. Like here, let's do an example. So if I put this on the 60-minute and we just like look right here, see how like here's this 200 MA, this line right here, but if I zoom in even further, let's see if I can get it out. Okay, you see how like we don't see the 200 here? If we went here to study config and then went to the 200 and I included it into the scale, watch what it will do. It just like fucked up my whole chart. Because it just forced
It
this
shrinks the
200.
candles, right?
Yeah, it shrunk the candles to fit the 200 into the chart.
Oh.
200 is always in there. Where if I turn it back off, so sometimes when you guys are scrolling in and out, your chart will get messed up.
Yeah, I have all those off.
Okay, good. See how it just took it off and then now it looks
Yeah.
a little bit better.
Because I
So,
figure if
yeah.
I can't see the 200, it's okay.
Yeah, exactly. Yeah, you don't need to see it. When you do see
So you have
then-
it all off besides the candles.
Yeah, I think it's all off. So that way, if it's, coming into the screen, into the chart window, then it's significant. If I'm all of a sudden seeing the 200 MA approaching, that's significant. Let's see, there was something else I wanted to turn on. Does anyone remember how to turn on the updated config? Because this is important. But anyways,
No, I don't. I did after, I think it was some DM you sent me, you're like, you gotta update your DOS. I updated my DOS, but it didn't do, it still doesn't look like yours.
yeah, I'll remember how to turn it on. Oh, other configurations. Oh yeah, so there you go. So this is what yours looks like. So if I go to right click and then I just go to like configure, this is the old way.
Yeah.
So
Yep.
then what you need to do is go to other configurations, under setup, go to setup, other configuration, and then here in this window, where's the new button? Oh, use new config window. Turn that on, and then press OK. And then now all your config windows are going to be all different.
Ooh.
But what's important about this is you can now use the new config for the level 2, and you can start to do this, the order size quote highlights, which is really important. So like let's say I wanted to highlight anything that was 20 shares or above. Oops, not 20, but 20,000 or 2,000. So let's say anything that was 2,000 shares, an order size on like the level 2 or on Bookmap, let's say that's 2,000 shares. It's now highlighted it. You see that? So now I'm always aware of what big orders are approaching on the level 2.
Yeah, I like that because I've not trained myself to look at all the, just the red and green blinking all the way down like that. I'm like, what?
Yeah. But it's really helpful because on a strong day, you'll start to see a bunch of these red orders on the bid or on the ask, let's say, either or. And then you know that there's a lot of orders on one side of the order book. So where does the market want to go? Does it want to go away from orders? No, it wants to go transact and fill all those orders and process all those, fees essentially. So if you have a strong level 2 or a weak level 2, you can start to see it, and then you can have more conviction in the direction of the trade. Um, like when we see these, it's the same thing as like the heat maps overhead, and then let's say we like look below, and there was like barely any heat maps down here. So does the stock want to go down here where there's no orders? No, it wants to go up here and start filling as many orders as it can.
Makes perfect sense. Yeah, that book map's a good tool, man.
I mean, it's the same thing as this level too. It's the same thing, but you know, using both is good practice, because they didn't have book map only until recently. Anything else you guys wanted to go over today? We can call it a day here soon.
Well, who put that Franco Meli? That Nvidia pen? What's that in the chat?
Let's see. I think it was Franco. It was this trade right here,
Oh, okay. Gotcha.
which he shorted at 244 above pre-market high. So that's kind of like a, let's see, 244 above pre-market high. He shorted it. And that was a pretty good. Franco, what were you seeing? A trend line break here at 244? Is that what you were going off of? Let's see.
I think he says, sorry, but I can't use the microphone. I'd wake everyone up.
Yeah, it's like the middle of the night.
Oh, gotcha.
Like half the people here in Europe, and I'm like keeping them up late at night.
Oh yeah, I wonder what.
Yeah, I like the Saturday sessions better than the Wednesday sessions.
Where are you at, Flo?
Germany.
Oh, okay, yeah. Like, what time is it right now there?
Well, it's okay. It's 10:25 p.m. because we haven't had daylight savings. We'll, add another hour. It's usually 6 hours ahead of you,
Okay.
East Coast. So
Yeah.
now it's 5 because daylight savings is, I think Sunday. So
don't
that's that 1 5-hour week, and then back to 6.
Yeah, Franco, really good trade here. Really awesome spot on this short. Got to be careful shorting around here though, because this is shorting front side essentially, and you're shorting above pre-market high. The smarter move is to wait for it to return back to J lines above pre-market high, and then look for another pull up. But it didn't really do that. It just went sideways, which looks like he held it through. Actually, you shorted it here. So it went sideways to the J lines, didn't really go higher, and then it looks like he took it and shorted it right here. Which that was a pretty sweet move. But still got to be careful here because you're so high above pre-market high and above the J lines. Like if Jay sees this trade, he'll probably tell you not to take that trade. Because, I mean, yes, it worked, but probability was against you. So, you're short here. Your first target's like down here at the J line, so it's pretty close. But luckily, when the Fed started speaking, this thing just dropped, or prior to it. One thing I want to say about when the Fed speak, you guys, is they like to squeeze it in the opposite direction they want to go, to just shake everyone out. Let's say they want it to go down. What do? They send the price sailing high, and then they drop it back down. And in this case, the market was going up today, consolidated, they sent it down, the Fed started speaking, they sent it down, and then what did they do? They bought it all right back up. And why do they do that? Because I was long here, people were getting long here throughout the day, and then what do? They go down here to take out all their stop losses, and then they reverse it when it goes back up. It now you just took out all the buyers, and then when it goes up higher, you're taking out now all the sellers, and so who's left in the trade? Only them. And then you have less resistance on your way up to move higher. So when the Feds speak, they kind of shake it in both directions intentionally because they want to get everybody out of the trade. If the Fed spoke and it just went straight up from here, from making this move up, there was a ton of people already in long positions. So when it moves up higher and higher, everyone's taking partials, and when you partial, you're a seller, so you're creating resistance. Make sense?
Yeah, really good, Eric.
So pay attention to that on the Fed speaking days. This is just from what I've seen, is they shake it in both directions. They're taking full advantage of when the Fed is speaking. And I think that it's a great time to trade because there's opportunity. There's a lot of opportunity. If you would have took this setup right here, short, would have been a killer move. This one, if you would have bought the dip here off pre-market low, kind of bought it right here, put a little bit of a wider stop loss so you have a cushion. If it starts breaking below pre-market low, maybe you try to hold it and then it curls right back up. And then now you're making a 5-minute high. Don't, if you buy it on the 5-minute high, it might just pop up and then stop down further. If you buy it on the dip, at least you've gotten into a position where you can take a partial and move break even.
Now, on something like that, Eric, so what you just said, so buying on that dip, for example, I mean, there's obviously no coincidence that that dip is the same dip as the open where it got bought up. So those levels right there at that 232.50, it looks like.
Yeah.
And now, so would you ever put a limit order in there on the books, like when you put an order out there to like buy at that level, or are you just putting limit orders at the moment because you got to wait for that? Or do you put like an alert, maybe on your chart that says, if it gets back down to this area, it got bought up at at the open there, it might get bought up again there. Or would you ever put like an open order out there?
No, I'd be waiting. Because if I place a limit order and I get dragged into it,
Yeah.
and I'm not around to manage the trade, that's not a good idea.
Yeah, I personally I don't like to put orders out there. I like to do them at the moment, but I was just curious, like,
Yeah.
what your process is on that. What's your thoughts on that?
Yeah, not really setting limit orders. I'm just playing off of the levels.
Yeah.
It's just exactly like you said. This is the exact same level as the open, and this blue dotted line was pre-market low, which was set right here. So it told me this level.
Yeah.
I didn't place that blue dotted line. That's just pre-market low, and that's
Yeah.
where I've been saying lately. There's been these amazing plays off of pre-market low and high. If you look at Nvidia, there wasn't really a short here at pre-market high because it went through it. It kind of went through it and then rejected VWAP and then rejected J-line and then dropped below pre-market high. But if we look at AMD, this is like the exact same pattern, right?
Yep.
But it happened a little bit closer to pre-market high. So it just depends on the day, and it depends on what you're watching and if you were lucky enough to watch the right thing. Pre-market high
Yep.
rejection here.
Yeah. Nice.
But same thing here. This one actually made a low, a new low, but where did it go to? Pre-market low,
pre-market.
which was set here.
Mm-hmm.
So, I mean, it's not a coincidence that they all went down to pre-market low and all bought off from pre-market low. It's the computers that are doing that.
They're so smart.
They are. We've programmed them well. Right? So,
Yeah.
okay, everybody, I think that's a pretty good day.
Awesome.
Any other thoughts? Just send me a message. Send Janine a message. And if you have any questions, you want some ideas for setting up your chart, let me know. Janine, you did say alerts, I heard you say, and actually I programmed this really cool mouse button click. I just click on my mouse and you see how this thing popped up?
Yeah.
Like alert price. And now I can click anywhere on the chart and then an alert will be placed. So if it goes down, let's say I wanted to place an alert at 110 exactly, I'm just clicking right here at 110, and then my alert window, which I just made disappear, wherever it went, my alert window will set an alert at the trigger price of 110, and then when it gets down to 110, it will like ping me. So there is ways to set alerts.
Nice. Okay. And so that just makes it, by pinging, it just makes a noise, right?
Oh,
Or
yeah,
does
or
it-
it just pops up a window and says, "Oh, AMV's reached 110."
Okay, cool.
So there is some cool ways to do that from not having to watch it all day. So
Yeah. Thank you.
all right, everybody, have a good rest of the day, and we will see you on Saturday. Keep it
Sounds
green.
good.
Thank you, Eric. Thanks,
Thanks,
everybody.
Eric.
Yep. Thanks,
Bye-bye.
everybody. See ya.